Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 22nd of August 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's kick off with a look at the overnight changes and price moves to be aware of. A relatively calm session on the world's foreign exchanges overnight. There were a couple of moves worth noting though. First of all, the US dollar giving ground against the Mexican peso, down by around 0.58% against the Mexican currency. The dollar gaining though against the yen, adding 0.28% against the sometime safe haven. There are also gains for the dollar against the ruble, adding 0.26% against the Russian currency overnight. And dollar index for its part trading back at 95.24, marginally better in Asian trading, up around 0.03%, well off of course the highs that we saw only a week or so ago. Okay then, what's on the calendar? Events that may move the markets today. Not too much on the calendar. We've already had leading index and construction work or construction output data out of Australia, and we'll look at that in a bit more detail momentarily. We also had a speech from the Reserve Bank of Australia Assistant Governor DeBell, and all industry activity index data from Japan that came out at 4:30 GMT. Slightly disappointing read there. To come at 11 AM GMT from the USA, we'll have MBA mortgage applications for the week of August 17th, and they're followed at 12:30 by a leap across the border for Canadian retail sales for the month of June. At 1400 we have US existing home sales. That's data for the month of July, and that's followed at 14:30 by EIA crude oil stocks data, again for the week of August 17th. And then at 1800 this evening, the real meat on the bones today, the release of the FOMC minutes, the data from the Fed annotating who said what and when and why at the last Fed meeting, and what their projections are for the future path of interest rates. Then at 2350 we switch over the Pacific to Japan for foreign investment in stocks and bond investments in the week of August 17th. Okay, well let's take a look then at the breaking news and comment that's caught my eye overnight. First of all, US stocks made fresh intraday highs as the bull markets in US equities moves towards a 10th year, though I should note that the US 500 index rejected the high level on its daily chart, posting a shooting star on the candle charts. Meanwhile, Australian construction output grew well ahead of forecasts at 1.6% in the second quarter of 2018, and the prior quarter's number was also revised higher, so some positive news there for the RBA. However, a fresh leadership challenge to Australian Prime Minister Malcolm Turnbull may be on the cards. You'll remember, of course, Mr Turnbull took a U-turn in his energy policy to appease Conservatives in his own party, and only recently managed to survive a leadership challenge. His opponent may now revisit that challenge, apparently. And Thailand's balance of trade data swings to a deficit as imports rose sharply in July, outpacing even the country's export growth. Okay, well let's take a look at something for food for thought, something to take away with you into the trading day and beyond. And why not think about this? As America becomes more isolationist under Donald Trump's administration, it seems a good time to look at how reliant the US is on foreign investments to finance its ever-growing national debt, which as of the end of June 2018 stood at a whopping $21.21 trillion, or some 105.4% of GDP. The chart here shows the breakdown of who exactly owns the US national debt. Foreign investors accounting for around 29.3%, so not the biggest, as that's US investors themselves, but still a significant amount, of roughly just under a third of national debt of the US is held by foreigners, and that's principally Japan and China, although there are some other big holders in that list too. Okay, time to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of trading on margin with leverage products, then please do contact your Pepperstone account representative, and do take a moment please to read this risk disclaimer fully.